The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Foundation podcast with Andy Duncan, keeping you up to date with expert opinion on precious metals and the markets.
Welcome to this Gold Money Foundation podcast with me, your host, Andy Duncan, again from the Mises Institute in Auburn, Alabama at the Austrian Economics Research Conference. Today I'm with Thorsten Polleit, Professor Thorsten Polleit, who is from the Frankfurt School of Finance and Management. And his talk today, his fascinating talk today, was about the gold standard that never was. Okay, Thorsten, can you tell us about the gold standard that never was?
Thanks, first of all, for having me. It's a great pleasure. Indeed, I was talking about the gold standard that never was. The basic theme of my talk was that we find the gold standard actually is a term that's quite loosely applied to all sorts of monetary regimes. And in most cases, the so-called monetary standards suffered from being compatible with free market principles, and therefore they created at times severe economic and ethical problems.
Yeah, so you're saying that the gold standard has fallen into disgrace over the last century.
That's right.
And the reason that we don't have it now is because, for a few reasons, but probably a technical reason, is it's incompatible with a welfare state because the governments just can't print up and spend on welfare and things. It's been accused of being a barbarous relic, by the Keynesians and by the monetarists. And also, as well, in inverted commas, the gold standard was blamed by many people, even to this day, for causing the 1930s depression.
Yeah, I think that is maybe the most important factor in the gold standard having has fallen into disgrace. People would think, and that is a message basically hammered out by mainstream economists, that the gold standard was actually responsible for the Great Depression, and that the gold standard is actually a drag on economic growth, and gold standards would make it even more difficult for an economy to get out of recession. And I think these arguments have contributed greatly to make people think that the gold standard is a bad monetary regime.
Yeah. So, with the gold bullion standard and the gold exchange standard, why were they incompatible with which we had in the 1920s and 30s? Why were they incompatible with free market? And what would be a gold system which would be compatible with a free market? Right.
Maybe I start with answering the second part of your question. How would a monetary standard or a gold money standard look like that is compatible with free market principles? And in my talk, I try to use the so-called Misesian approach for delineating and explaining the principles a monetary standard has to live up to be compatible with free markets. To start with, money has to emerge freely from the free supply and free demand in the marketplace. You would have the issue that money is private property. It rightfully belongs to those who produce it or voluntarily exchange it against other goods and services. So money would be a private property item. And then you can basically go on and think about how the banking system should look like. I would argue you would have deposit banking on the one hand and credit banking on the other side of the business, and they would be basically separated business units, and you wouldn't have a central bank in such a free market regime, and you wouldn't have any interest rate policy, you wouldn't have legal tender laws, and taken together, this Austrian method allows you to formulate the conditions that would prevail in a free market system.
Yeah. So it would be, it doesn't necessarily need to be based on gold. It could be anything anyone wants.
Yeah, I mean, the important issue is clearly if market is a free market phenomenon, if money is a free market phenomenon, so to speak, you would have competition to find out what people would like to have as money. If you look at monetary history, people obviously always preferred precious metals, especially gold and silver, over competing media.
Yeah.
But as I said, competition would set or would actually determine what money is.
Now, one of your conditions, condition 2, was that it needs to be these money warehouses where we're depositing the money. First of all, the money can only come into existence through the production of more of the commodity.
That's right.
So gold, if we just use gold as an example, the only way money comes into existence is people mining gold out of the ground, refining it, turning it into coins and buying stuff with it.
Exactly.
And the laws of supply and demand would determine exactly the perfect amount of gold coins to be produced. But your second condition was that we need to have 100% reserves. Now, is that absolutely vital, or could we allow fractional reserve banking?
There's a long-standing debate within Austrian circles whether the banking industry should have a 100% reserve backing of the outstanding money supply, or whether it could be less than 100%. I must say, to cut a long story short, I'm in the camp of those arguing that we need 100% reserve backing, and this is basically driven by praxeological or the Misesian kind of thinking, and also by taking into account the insights of what private property means, and so I'm very much advocating a 100% gold-backed or commodity-backed money supply system.
Yeah, because going back to your kind of earlier point, we could have paper notes for gold or plastic credit card type things with gold behind them, but these must be fully convertible at all times, and the banks, the kind of deposit banks holding the gold, must be fully relaxed about everyone just turning up on one day and saying, give us all of our gold.
Yeah, I mean, in such a system, in a free market system, as I said, you would have two kinds of banking businesses. On the one hand, you have the deposit banking business, and on the other hand, you have credit banking business. And the deposit banks would basically be kind of money warehouses. People would place their, let's say, gold or silver or whatever the money medium is, with these money warehouses, and would receive in return a money warehouse receipt. And this would serve as money, and you could digitalize the thing, and you could have it in the form of a banknote, as a certificate. And the important issue is really that the money proper is or the outstanding money warehouse receipt is backed up by 100% money proper.
Yeah. Now, your other 4 conditions were free banking, which to you means free entry to anyone into bank. You don't need a banking license from anybody. You just set yourself up as a money warehouse, the same as anyone could set themselves up as a furniture warehouse, a temporary furniture warehouse. But the other 3, no central banking, no legal tender laws, and no government involvement in the kind of monetary system. Now, these are quite radical measures. Most governments that I can think of would be opposed to, especially those last 3. What state does the world have to be in before these 6 conditions can become achievable?
Yeah, let me first start by saying these 3 principles, in particular, no central banking and no fractional reserve banking, no legal tender laws, are basically deduced from this praxeological approach. They allow, on the basis of the axiom of human action, to deduce basically the logical categories inherent in this axiom of human action. Now, the story starts with the state. The state is a territorial monopolist of ultimate decision-making with the right to tax, and as such, it is a violation of private property, and private property is basically an a priori it is a category of human action, and government, the state, is a violation of property rights, and so it is not admissible in a kind of free market society.
Yeah.
And so, in the same way, you could argue legal tender laws are a violation of private property. And of course, if you derive at such a conclusion and compare it with the, let's say, mainstream economic viewpoint, you may easily arrive at a conclusion saying, oh, that sounds very radical. But the problem is clearly, I would say, that the view has been so has become so embedded in economic and political thinking, namely that we need central banks and we need government interference. And look at monetary history has brought about big crises and big problems and even wars, ongoing wars financed by central banking, fractional reserve banking. And so that is basically the root cause of the problem. And I try to, contrast the current thinking with, let's say, this praxeological approach.
Yeah. Now, for me, your speech today was one of the highlights of the entire conference. So thank you for giving it. It will be available on the Mises website soon. I don't know how long it takes them to get these things up. But if anyone does want to look at it, do go to the Mises.org site and download that maybe in a week or so's time. Now, one last thing before we go. A little bird has told me that you've just started a new business. Am I allowed to ask you about the new business?
Oh, Andy, that's very kind. I would love to know the little bird who told you about it.
Oh, he told me in a different language from anything we can speak.
Exactly. What we do is we provide investors with hopefully a successful strategy for investing funds, for investing savings in uncertain times, in times where we would see great changes in the monetary environment. And we obviously think we have developed a strategy for weathering the storm.
Yeah. And does this? Do you have a website yet?
Yes, the website is www.polleit-research.com.
How do you spell research?
It's REACHERT.
Oh, research. Oh, sorry. Yeah. Okay. We'll put a link to it on the
maybe that's best.
Podcast. It's probably easiest. Okay, it's been great talking to you, Thorsten.
Thank you very much for the invitation, Andy.
Subscribe to the Gold Money newsletter at www.goldmoney.com to receive email updates on new articles, videos, and iTunes podcasts from our Gold Research section.